Okay, guys, thanks a lot for everyone who joined in already. And thanks a lot for everyone who are watching us through LinkedIn. So first of all, I'm Ru, the founder of Amdena. And we are doing this event today to talk about what impact startups should be doing to raise investment, what are the challenges they are facing. And we have with us quite an esteemed guest. First of all, so I will ask Bas to introduce yourself.
Hi, everyone. I'm Bas. I'm also looking forward to hear who the esteemed guest is. Or is that me? But yeah, I've been a marketeer all my life, then turned into a consultant, then into a founder, then into an angel investor, and then a mix of angel investor and VC. So that is the path of my life so far, and I'm a growth hacker in my heart. And I'm very excited to be here. Thanks, Ru. You're doing amazing work with Amdena in the impact and AI area, and I'm very proud to be a small part of that.
Thanks, Bas. I will then ask from Katapult Group, Fredrik and Tharald to introduce themselves.
I'm Tharald Nustad. I'm the tech entrepreneur and investor of 20 years. Focusing the last 10 years on impact tech investments, and built the Katapult system as a vehicle for mobilizing more capital into impact tech, and also investing my own capital into impact tech startups through the Katapult Accelerator, the Katapult Ocean, and soon Katapult Africa, and also the Katapult Future Fest as a convening event to mobilize, bring people together around impact tech. So.
Yeah, my name is Fredrik Winther. I have my background starting out as a PhD in industrial economics and career as a management consultant. And for the last 10 years plus, I've been working with the startup ecosystem in Norway, and particularly Oslo, and also a couple of years as an angel investor. An investor side setup, and now as the CEO of Katapult, so building further on the ecosystem thinking.
Thanks a lot. I think I just see that Pierre is here, so I'll just admit him and wait for him to come in. Hi, Pierre. Pierre, can you hear us? If not, we will just move ahead and maybe he's. Hi, Pierre.
Hello.
Hi. So we're just doing a quick introduction, so would love if you could briefly introduce yourself.
Yeah, sure. Hi, I'm Pierre. I'm one of the founders at Seedstars. Seedstars is an organization that has two activities. One is education of entrepreneurs in emerging markets. We're active in 90 countries now around the world, as well as investments. So we are also impact investors, investing mainly at seed stage level for the moment. Across all emerging markets.
Cool, thanks a lot. So for the audience, we want this to be hopefully a bit interactive, so feel free to type your questions if you have, and I will try to take them up as much as possible. And for today, I thought of putting an outline to what I would like to at least touch upon. So I'm sharing the screen that you guys can perhaps see already. So I have broken down into 4 different segments. And we'll touch upon each of those segments and potentially spend around 10 minutes and try to get a view of each of the speakers. For the first segment, we start with, what is impact and how do we define impact? And specifically from the investor's point of view, we'd like to understand how they define impact. Is a startup that is creating a jobs like an Uber is an impact startup? Or does it have to be in the sector of humanitarian environmental domain? And I also at the same time want to ask the same question to the audience. So feel free to type in your answers either in your LinkedIn or in Zoom that what you see as an impact as. So first of all, I'll ask Tharald, maybe you would like to go into this and answer this question. How do you see impact?
Yeah, we define impact as, according to the GIN, Global Impact Investing Network, to invest in organizations that seek to have environmental, social impact in addition to financial returns. And there's 3 more additional things to that. It needs to be intentional, it needs to be additional, and it needs to be measurable. So we do not see just creating jobs as impact, there's positive impact there. It can be, but it needs to be qualify for these different intentional, additional, and measurable. So, and we also focus on businesses that solve the one problem, social or environmental, as the core of their business. So to find businesses where the impact is the cause of the profits. So have a clear direction from solving problems to making money. And then of course, yeah, that's how we see it.
Yeah, I could add a little bit to that. And if we look into the 100+ investments that have been done over in the Katapult system over the last years, there are many ways to define the impact, definitely. But some common denominators is we can find in the UN sustainability framework. And I think I really like that framework, even though it's not too precise, because it's started to become a really global, common language and conceptual way of looking at the grand challenges in the world. So it's easy to communicate. A lot of people are working on it. A lot of policy work is aligned with it, and a lot of organizations have adapted as their kind of way of thinking about impact. So but it's important to add that we also aim to highlight that reducing negative effects is not sufficient, but you have to kind of proactively also be part of the solution and bring things into a positive alternative and more future-oriented work. So that's some color to our perspective, and also that we don't see, as Tharald mentioned, impact as something in addition to profits, but the core of profits, because you have impact as the core of your business model. That's also why you attract talents. That's why you attract customers. That's why you solve real problems. That's why you get the goodwill from policymakers and from Bas. I like that you are a growth hacker at heart. I think that's an important part of that as well. And it's also in the end why you will get your investors on board.
Thanks a lot. And one of the points I kind of find it interesting, both of you kind of briefly mentioned about the UN sustainability goals and also about being measurable. That's something I would love to touch upon in the next section. I see already that some people have defining impact, so I will perhaps read them out, or maybe people can read it. But I will next go to Pierre. Maybe you want to add your thoughts?
Yeah, it's a very good point, and I like. We also very much align with the SDGs. We also use it kind of as a framework, and economic development is is one of the SDG. So we're working mainly, like I said, in emerging markets. By the way, emerging markets represent 80% of the worldwide population. So and based on that, for us, when we thought about that, we said, does it fit with the SDGs? And in your initial question, is Uber an impactful company? From our perspective, at least working in emerging markets, it is, just by creating jobs. Same as Jumia, for example, it's a simple, if you want, e-commerce company, but they've created thousands of jobs. These jobs have then a further impact because, as you can imagine, there is a ripple effect. There is even these numbers. There are different studies that shows that one job created would create maybe 2 to 6 other jobs, depending on the kind of jobs you've been creating. So, and all of these, of course, the economic development helps a lot, especially in the markets that we operate in. And it's not necessarily intentional from the entrepreneur. So that's one of the point that you raised before, the intentionality of the impact. They just want to create a venture and solve a problem. So that's not in that definition per se, but it is impactful from our perspective. So from our end, we would see job creation as impactful.
Thanks, Pierre. So that actually puts a very interesting point, that the line between an impact startup and a typical startup, may be quite thin, and that's where I would love to get Bas your thoughts. And as I understand, your VC investment is not particularly focused on impact startups as let's say per se, you are in general investing in all kinds of startups. So how do you see as from your perspective?
I think impact is, we should take a step back and say that impact, our goal as investors, our moral goal should be that the word impact investing or the definition is gone. Not be about arms trade or whatever. You invest in something that is cool, positive founders, positive projects. I may sound a bit like a hippie, but for me, in the 25 investments I've done, I've never said yes to any business where I could feel that either the environment would be seriously harmed or harmed at all, or people or groups of people. So I think this whole impact thing, you should maybe just say there is investing, there's good VC investing, and then there's a small niche which is for the outliers who want to invest in an arms factory or to more efficiently kill 1 million chickens, stuff like that. So yeah, this impact investing, it's a nice word and it does try to cover a particular sector. But I think you should just think in yourself, like, would you be proud to tell your children or grandchildren that you invested and made your millions with a particular company? Or as a founder, are you founding something while you know that the planet is struggling, that you actually are going to build something that will make it struggle more? So I guess this is a mentality change that needs to come, and it will probably always come slower than I would like, and that we all would probably like. So yeah, it sounds to me still that you can either think with your right brain or your left brain about this, or with your heart or with your brain. But impact investing, it's just do good, AI for good. That should be the mantra of your investing.
Absolutely. So I think we all can agree that no one would deny that we don't want to do any impact. So I think the line actually, the difficulty comes in when you are trying to measure that, And there is one question from Anurag, that do you also factor in impact in startup valuation as well, quantitatively? And I think that's where I would love to go to the next section is, when as a startup, there are, let's say, called impact startups, they're trying to define what metrics that investors are looking at when they're investing at those startups. So here I would, first of all, perhaps go back to Bas and ask you this question, that when you are investing, what are the factors that you're looking at? And is doing social good is more of a feeling, or you actually try to quantify that in some way in the metrics?
Yeah, I would of course like to circle back to what my esteemed colleagues, fellow speakers said. Of course, all those systematic approaches are very plausible and very good. I'm definitely not saying they're wrong. I was just talking more about the definition. Now, when investing, I mean, I came from an angel investing operator-led approach to a VC approach where you're all of a sudden investing other people's money. So the ignition of an investment potential decision is definitely intuition. And when you sit with the founder and you feel your truffle detector go like, wow, this gentleman or lady is up to something cool, that is already for me X% of the algorithm of decision. And then the rest is just filling in the gaps. And very often then even, I mean, I always immediately, when I fall in love with a particular project, that already is a warning sign in itself as well, because then you need to kind of really take a step back. It's as if you're addicted to buying clothes. Then if you like some sort of shirt, you know what, take a weekend in the forest, and if you come back and you still want that t-shirt, then it's fine. But so I would say more specific, after there is the initial kind of love connection, electricity, that you say, wow, this is a cool project, I would have loved to be involved even as an entrepreneur with this project. Then after that you start looking at a few elements. I think the closest to impact investing would be diversity. In the current fund, our second fund, we're a Dutch fund, 20 million euro fund that is the only growth hack VC in early stage in the world. And we're also the only Western VC with feet on the ground in the CIS countries with an office, etc. So I would say diversity. 50% of the founders in our new fund are female or co-founders. When you look at the team, that is definitely a very large chunk of the decision pie. It's the management. Are they doers? Are they managers? Are they leaders? Are they a mix? Are they introvert or extrovert? That is so important for the group dynamics. I would also not recommend to work with just one single founder, although it sometimes helps very well, but it's always safer if there's already a bit of a group dynamic between a a group of people that have worked together for a while. Of course, you also look at the fact what's the experience. So that's the executors, the managers, the leaders. I would say there needs to be some sort of unfair competitive advantage. That would be the third thing. That you see something in which, yeah, it's more defensible to see that the startup can do something that is not immediately touched by someone who presses the copy-paste button. The network effect is very important to see if that is there. Sector trends on a macro level is something we try to quantify. We even have a PhD in AI and machine learning on board. And I really look a lot forward to how we're going to work with Ondena to get that part much better organized. Then I would say the product market fit, me with the heart of a marketeer. I know that the early stage, we invest in pre-seed and seed. That is where you don't always for sure know that there is this product market fit, but at least you can have this simplicity of not thinking too much inside this jam jar, but thinking about connecting the dots, like, is this a problem that really is solving something? Isn't it maybe too much of a niche solution? Niche solutions are great, but it should at least then in that area show that it's not a vitamin pill, but a painkiller. Then I would say scalability. I don't really like the startups where it's extremely hard to go from 1 to 10. Therefore, I've noticed in my life, every time I started touching hardware, offline projects, although I sometimes love them and I do them as a hobby, as an angel investor, but as a business, I would love that the servers can do a lot of the work, that you make sure that it doesn't really matter whether you have 10,000 people using a platform or 1 million, you just add some servers. So we love scalability.
9:30 कोई call तो नहीं है?
I'm sorry, boss, go on. I'll just mute.
So,
Someone is, okay. Please mute yourself. Okay, sure, go on.
Okay. And then of course, I mean, we are talking business, so the deal terms should be great. If it's a business that has not yet done anything, or a project that is really just a nice idea, but already wants to be valuing itself at a ridiculously high valuation, then unfortunately, I won't be able to join, because the risks should also somehow be elemented. And very important, and also a decisive factor for us, is we have 15 people in our growth hack team. We would love to add value, not just with cash, but with our experience. I've been a CMO for 20 years for Orbitz.com, for lastminute.com. I founded a market leader in Russia in the travel sector. So I would love our knowledge. We even have a methodology for that called Cash Cow Bomber. We check prior whether we feel that we can really help with the growth. Doesn't need to be on a day-to-day basis, no, but if the founder feels that we can bring much more to the table than just the cash, then that is then there's a bit more mutual love in the cooperation. Otherwise, I would really even honestly recommend a founder, like, if you're just looking for our money, then you can just look at any fund out there.
Cool, thanks, boss. One of the comments is from Kevin, is about impact startups are the ideas that can do a huge change in region by solving big problems. And so, Pierre, you did mention about your focus in the developing world. So you start, what made you choose developing world? Is it just an opportunity, or also because you think that you want to create an impact? And also the same question to you follow up is, how do you measure that actually?
Yeah, so we very much believe in profit and purpose that can go hand in hand. And we believe that entrepreneurs are not only the only ones, but can be really part of changing the status quo in a lot of emerging markets. Why choosing also emerging markets? Like I said before, it's 80% of the worldwide population, and these are the population that are suffering also the most. So for us, it was kind of natural that this is where we would concentrate our efforts. I wanted to mention also that we are supporting, we use the word startups here a lot. We define them on our side as what we call high growth companies. There was a very good, I think, way to categorize these companies from Omidyar Network. It's a model that we use a lot, that categorize them with the innovativeness of their product and services, and on the other axis, it's the scalability of their markets. And when we look at that, you can classify then the companies from livelihood companies to dynamic companies to niche market to high growth companies. And we try to focus on high growth companies. And why are we focusing on high growth companies? Because the high growth companies have a disproportionate impact in terms of job creation, and also, of course, on the solution that they deliver. Just a quick number, it's there is a symbolic study that showed that 6% of the high growth companies generate 50% or more of the jobs. And this is where we want to put our efforts in supporting those companies. Just also quick history, in emerging markets, a lot has been done in microfinance, in supporting these micro entrepreneurs, usually livelihood entrepreneurs, how we call them, that create maybe 5, 10, 20 jobs. The high growth companies are creating 200 jobs or more. So this is just to categorize, just to define what we call a startup. For us is a high growth company that will have the big impact. And to answer your question, why emerging market, etc. Now on the KPIs, we try to categorize them in kind of 3 sections, apart from, of course, the job creation that we track. For us, there are like 3 impact categories. So the lowest impact, if you want, is pure just job creation. That's the basic one. Then there is for us medium, which are basically companies not only that are creating jobs, but that are working also in what we would call priority sectors, including health, education, financial services, or environment, for example. And finally, there is the high impact category that are delivering fundamental solutions for a population that have fundamental needs, especially marginalized population. So this is a bit how we categorize these three type of companies. And then obviously, apart from job creation that can be compared across all the different categories, we try to, of course, have specific metrics per category, per sector, if you want. So if it's in education, you have certain metrics. If it's environment, you have some other metrics. This is a bit how we're trying to do that. We didn't find a standardized way to measure the impact. We could imagine creating a score or something like this. That could be a way to do it. But this is currently how we are doing it. Just a last comment. We are using a lot what we call the theory of change in order to measure the impact that we are having ourselves, which is a framework, honestly, that is quite good, that helps us really to, I think, focus on our efforts on what matters and what is really impactful in the end. And to come back to Bas' comment, I tend to agree with him. However, I like that we use a label, because labeling this kind of investment just drives action from my perspective. It just pushes you to think in a certain way. The fact that you're using that impact, it forces you to think about, okay, but why am I doing that investment? What's the purpose of it? Not only the profit that is of course part of the investment, but also what is the main purpose of my investment? And by having this label, I think that forces, at least that's what we feel internally as investors ourselves, trying to understand, why are we going there? What's the rationale? Is it just to make money? Then I would invest in just a betting company, or something like this. But is it really what I want to do? Is it where I want to spend my money, my time, my resources? And if it's impact, I guess you switch a bit and you try to think differently about it.
Cool. Thanks, Pierre. Now, so I'd love to get the view of Fredrik and Tharald about this, but also I think I will also ask you guys to answer one of the questions from here on the gene metrics and framework. So how do you guys measure the metric? Because you are focused mostly on, based on looking at the website, is environment and social domains. So what KPIs you are using, and are you guys using any framework that could, just impact startups can kind of know? How do you evaluate?
Yeah, we run the accelerators as well, and all of the, or not all of them, but many of the huge proportion of the investments are done to the companies that are gone through one of the Katapult accelerators, and there will always be training elements and workshops in the accelerator where they are kind of detailing their impact measures, and like it is mentioned here, that will vary a little bit on what kind of vertical or sector you work in. But Tharald, you could also maybe say something about the main kind of framework. There are a lot of frameworks out there, but some of them are now becoming more popular and becoming like the standard in the impact world, so to say.
Yeah, so we use a combination of framework we have developed ourselves that use a combination of the impact management project, the SDG mapping, and the IRIS Plus that is from GIN. So we use all of them kind of in the combination. But I think it's important to say that we do map the impact and measure the impact, but we also we look for impact that is clear in the field. But as I said in the beginning, our most important thing is that the impact they're doing is the causation of their business. And we look for businesses that are startups that can be impact unicorns, that can be billion-dollar businesses from impact. And it's important that the gates like to our investing is definitely impact. It needs to be there, but beyond that, then we look for amazing team, amazing business opportunity, and of course, amazing tech capabilities.
Cool, thanks a lot. I will take a few of those questions from the audience, and one of the question actually quite well fits into the next segment in terms of raising investment. And this is, I'll first go back to both of you from Katapult. Is when you are raising an investment, so the factor of, let's say, the startup valuation, when you are taking the valuation of the startup, do you take into account, let's say, that the measures that you're doing for the impact part, including in the startup valuation?
Yeah, I would say that's a fundamental part of it, and it relates to that. It's also part of that impact should be part of or core part of the business model as well, and that the reasoning is the potential for this startup to make money and to make profits is because they solve real problem and will have real impact, and not as an add-on or something on the side of what they are doing. So it's definitely part of the valuation.
Okay, cool. I will next ask Pierre maybe this question that let's say the startups that are currently raising investment, and I do talk with a lot of impact startups, they categorize themselves as impact startups, and they find it quite difficult to raise investments. And this is quite a common thing that I've heard. What would be your advice to them?
So usually I think if they're struggling, it's not because of the lack of investors. I think there is capital out there. There is money out there. We're investors are here. You have here investors on the line. So usually it's not the lack of capital. There's plenty of capital available. Usually what's lacking is the lack of quality projects. At least that's what we've seen. And this depends a lot from my perspective, on the quality of the talents as well, unfortunately. So that's more general comments. Now, if I don't know, if I had to give an advice, it's difficult to give such a generic advice, I would say. But of course, when you can imagine that when you're talking to investors, you're not the first one, right? On our side, we're receiving something like 7,000 to 10,000 applications every year. And we have made last year maybe 30 investments or something like this. So it's quite small, right? The number of investments that we're doing, and the conversion rate, if you look at the funnel, is quite small. So you should be first aware of that you're not the first one. And I would say that you would better convince us with a spreadsheet than with PowerPoints. My point is that I better have an entrepreneur coming with something that he can show with some traction somehow. Could be any kind of traction. Could be revenues, could be users, could be whatever, engagement, you name it, depending on the company. And that would be much more convincing than any PowerPoint presentation. So of course, it's again, it's a very generic comment. It's not the entire story, but that could be a very simple way, I think, to put it from our perspective. Then we have a bunch of criteria that we look at, of course, but that's something I wanted to share in a nutshell.
I think to supplement that what we are looking for, it's hard to do a startup, and even though you're doing the impact, you have to be as good at building a business, at building a team, and using technology. So we're not looking for impact that, they need to be just as good at making startups as the rest, and that's the important thing, that it's hard to do that, and you need to be an amazing team. You need to have a business market, and you need to have a tech element. And but I think another element that's important is to find the right investors, because there's lots of investors out there, and they all look for different stages, different sectors, different regions. So to understand that investors is not one size fits all. There's a lot of different investors that look for different things, and if you are a good startup, then it's about finding the right investor.
And I would add to that, there are also a lot of old school investors that aren't that founder friendly, that are more used to traditional investments and now entering the field of tech startups. And I would be a little bit careful about that as well, and make sure that the investors that you bring on board, it's almost like a marriage. You have to live with it for a long time, and it's a close relationship, and you have to also match on a personal level. That's also why we think intentionality is so important for part of the impact evaluations, because if you don't really have the impact intentions behind your product, even though it looks like an impact technology, in the end you will maybe not be that motivated and that able to kind of break down the walls you need to walk through and do all the things that you have to do as a founder. But for when picking investors, make sure that you're not just looking for the money, but also a partnership and knowledge and network and competencies and growth hacking teams and whatever.
Yeah, thanks a lot for that. Actually, I absolutely agree with that. And here I will ask Bas, because you did mention about intuition, and when you meet someone and you feel intuition now, and Pierre spoke about, he'd rather have an Excel than a PowerPoint. How can I, from a point of view of a startup, what a startup can do to convert, like say, to help you have that intuition, if I can ask that question? Oh, you're muted, Bas.
Yeah, if you would allow me to spread a few numbers, I have a thesis. I know there's this German philosopher, I think he's German, Heidegger, and he believes that the humankind is very moved towards technocracy, and it constantly progresses. And a little area, let's say that 80%, everything mankind wants to catch in processes, predictability, repeatability, etc. But the miracles happen in that other 20%. And when you look at my personal journey, I started investing 10 years ago. The startups were small. And 10 years later, this is a top 1% performing fund with $6 billion in company value that 10 years ago hardly existed. They were all young people with a dream. And now they are ruling the world. And then I started retroactively thinking, like, what the hell did I do? I don't have a financial education. What did I do right? How is it possible that I put somewhere $10,000 and then it's now a $250 million company in a market leader in Central Asia, or Miro.com that is now a multiple unicorn. So I started understanding that there is a big mismatch. When you look at the success factor or index for funds, it's the internal rate of return, or it's the DPI or the TVPI. Basically, these abbreviations show how effective the deploying of their capital was. And when you then start looking at stats in US and Europe, then it is very likely that you'll find that the IRR of a venture fund in average in early stage is around minus 0.1%. So you might as well just give monkeys cash and let them throw it and then out of the window, and you'll probably even make more money than with an average venture capital fund. Now, this is, of course, the average. And then, of course, there is the top 25%. That's 12.7% IRR. Sorry, 7.2%. And then the top 5 or 7% is well above that, about 20% or higher. So our fund is at 88% IRR. So I started thinking, wait a second, let's now look and zoom in on angel investors. Angel investors are often people, entrepreneurs that had a very productive life as a founder, and they share that knowledge with their founders that they invest in, and their average IRR is 23%. So angels, of course, they have less fiduciary obligations. They don't need to pay for expensive lawyers all the time, etc., or accountants or central bank supervision, all that like mini bank stuff. But still, it means that there is something better there. So when I teach angel investors, of course, you've got this Monte Carlo principle that you need to at least have 20 or 30 startups to diversify the risk. But the operator-led element will have the future. You will need to be a fund that's not longer coming from Harvard with an MBA and an Excel spreadsheet only. You need to have been a sergeant in the trenches. You have to have founders in your team as a fund that have set up businesses, that understand how hard it is to scale up, how hard it is to recruit, to know that you fuck up here and there, pardon my French. So I would say that the more we can get the angel operator-led mentality into the VC world, the better we can cover the pre-seed and seed, because it is very hard to capture it in data. That will be a beautiful challenge together with Ondena, because in a way, startups in the pre-seed seed stage, they're still children. So the logic doesn't always apply. They will get 3 new B2B clients and all of a sudden the entire financial model is upside down. Or a founder leaves in year 1 and the 2 co-founders remain. So there's so many unpredictable factors that I think reality works better than just the spreadsheet. So of course, this sounds as if I'm like, throw away every Excel spreadsheet. That's absolutely nonsense. And I completely also agree with Pierre-Alain. And we do have our own 25 steps questionnaire to multiply particular variables to give an instant evaluation or evaluation number, a scoring card. You can actually find it on our website. You can do a 10 or 20 minute questionnaire and it straight away tells you whether you're investable or not. But getting back to the topic. So I would say get this operator-led element in there as a fund, because I was as an angel often investing my own cash. And only in the end, in the last 3 years before I set up fund number 2, I started taking other people's money. And I noticed how much more to the point I needed to get, because this is other people's cash. You don't want to stuff up with other people's money. So that's where I'm lucky that I now have a partner in my team who is my fellow general partner, who is really good in all the Excel stuff. And I think that is the yin and yang that you need to get. So the intuition versus calculation, or jointly, and getting this a little bit closer to what you were asking, like what is the exact advice for startups? I would say, firstly, make very sure that there is a very good match between the investor you are approaching and not. Do your homework, check out their website, because maybe they do checks from $1 million up and you are looking for $500,000, then you're wasting their time and your own time. Also understand that there's a horrible stat out there, and I hope it's not true, that a fundraising founder needs to approach 200 funds to get 1 term sheet. Now, if that is the case, so you have on the one side funds that on average perform very badly, and you have a complete mismatch between the fundraiser and funds. So that is what Pierre-Alain also mentioned about the quality of the startups. That's definitely one thing, but also make sure that I'm sure that at least a quarter of these sad numbers can be decreased by better matching. This is where I really hope that big data and machine learning can help us a bit as well from the matching. So I would say do your homework and make your list very relevant, almost like when you're job hunting. It is always good to see if you can find at least 5 points where you are really matching with the employer, that you feel that you have the same interest or that you have the skill sets that is exactly what they're looking for in their job description. Try to make sure that you're not just spray and pray with your requests, but that you really snipe. So that part. And understand that these investors, they all need to probably select only 1 or 2 or 3% out of that whole range of approaches. So it is a jungle out there, and don't feel that you are a bad startup if you get 10 or 20 times a no. It just means that the matching is not there. So
cool. Thanks, Bas, and thanks for mentioning about this, how poorly some of the funds do perform, and about the predictability. So just to bring it there, that Omdena is running a challenge with Katapult Accelerator, where Bas is the managing partner, and Seedstars has been partnered to really look at investments, look at startups, and see what are the factors that actually maximizes, in our case, would want to see as maximize impact, and we define impact as job creation. So can we, using big data and machine learning, identify ways, and that can be helpful for investors also to perhaps build a user model that they can use to identify those kind of, will be interesting to see. So that brings to the final section of that. And first of all, I asked the Katapult, both Tharald and Fredrik, that the Bas did mention about how investments perform poorly. And this is a generic question that, how do you guys, in Katapult, for example, how do you see your performance, and do you overall see, how do you see the future of investment going forward? And do you see also, like, say, what I spoke about, the big data playing an important role, if it's not already playing an important role in things that you're investing in?
Yeah, I could say something about that. And I think what we will see happen to the field of impact investment, it's a little bit how we have seen the development within the field of sustainability. It becomes more and more mainstream, and in the end, maybe within the end of this decade, we don't need the term impact investments anymore. I don't know, but at least it's growing really fast. And I think also that it has got some kind of acceleration during the pandemics. An example around that, there were a lot of traditional economists that in the beginning of the pandemic said that now we will see a decline in sustainability investments because people will attract their money and put it more into the secure traditional investments. What really happened was the opposite, and I think also the wake-up call that the world has got now during the pandemics makes people, or force people to think more through where am I using my talent, and how do I behave as a customer, and for politicians, where do we force the regulations, and where do we go with this? And same thing also from the investor side. And to your point with the big data and AI, some of the analysts now, they see that because investors have access to more and more data when it comes to analyzing and evaluating investments, they can choose better and they can make more informed choices. And then, of course, if you can choose between companies that are doing a little bit bad versus companies that are not doing bad, and versus companies that are like producing the solutions of the future and being surely on the right side of the future, you choose the latter ones. And with more data, you're more able to make informed choices about that. So that will be my take on it. We are going towards a future where impact investments is growing fast and eventually becoming mainstream, and a part of that is very data driven.
Cool. Tharald, do you have anything to add?
No, I don't think so.
Cool, thanks. I'll go to Pierre for the next one. And same question, how do you see that? And also, there's one person who asked what is the best platform for investing in emerging markets. So I will also let you answer that because you have been working in emerging market.
Yeah. So we've looked at our past data and we've realized that out of the companies that we had in our database, and for those we had the numbers, we don't unfortunately have all of the data available, which by the way will be certainly one of the biggest challenge we will be facing when doing that work that we're talking about, and that's where AI maybe can help. Let's see. But we've looked at the numbers and we've realized that out of the almost 800 million that have been raised by the companies that were in our database. 6% of these companies raised 90% of that amount. So basically, again, same conclusion. There are very few companies that are able to raise money, and we can then use fundraising as a proxy to potential more impactful or more successful companies. So we've realized that, and we have one issue is that we are not able today to identify exactly why are these companies or why were these companies able to raise this funding, and why are these companies potential high growth companies versus all the others, all the 95% basically. And we would love to be able to find the answer, and we believe that the answer might come from data. I think we are a bit, I've been reading this book from Jim Rogers that you guys might know from Renaissance Capital, which is basically doing quantitative investments. It's on listed markets, so very different markets, very different dynamics, etc. But I think we are a bit. It started in the 80s, more or less, and I think we are in the 80s in the VC investment scene. In the sense that we are starting now to look at data. You see more and more funds that are quantitative VCs that are coming out. Some that are investing heavily even in that sector, and I think we're just at the beginning of that. So if any change should come in the future, I tend to agree with what Katapult has been saying, is that it should be more data-driven, because the industry, if you look at the investment committees, it's a bit like a Moneyball movie, right? Where you're in the room and a lot of it is I think that, I believe that, etc. But there's very little data to back up the decisions, even if it's coming more and more, of course. And that's where AI can help a lot. Now to your point, finally. Conclude on the emerging market parts, I was talking about data. Data is key in order to do that shift. And in emerging markets, it's often a challenge to get proper data. I'm not saying that it's easy in developed market at all, but it's even more of a challenge in emerging markets. So that's, I think, the biggest challenge we'll have to face is having access to the correct data, and then with this data being able to figure out the right models that can help us identify the right investments, possibly to have a bigger impact.
Cool, thanks Pierre. So before we end, I will ask everyone to do final thoughts. Maybe start with Bas. Do you have any final thoughts that you would like to share?
Final thoughts is that I guess founders should also feel that funds are startups in itself. We are in a I think that VC as it is now is probably hasn't changed much since the 90s, and the data element, I completely agree. We need to test and try and improve that part, but that also make sure we marry it to the normal human intuitive interaction, especially in the impact investing area.
Cool, thanks, Bas. I will go to Katapult Group with Fredrik and Tharald. You guys have any final thoughts that you want to share?
Yeah, I can start. I would also recommend for startups to try to connect to ecosystems of entrepreneurships. And we've seen the force of that, and also that it is saying that it takes a village, not to just raise a child, but also to create a startup, and the benefits from being part of a solid ecosystem. And that's also what we try to build here at Katapult, where you both get the advice, access to the advisors, and you get access to the program, and you get access to a huge network of investors, and also experts within the field of impact, and help on making that framework work for your company. So that would be my last kind of advice. of course, you should think about connecting to the right investors, but also the environment that you put yourself into.
Thanks. Pierre?
A final word. Again, I think you mentioned the world of raising children, etc. I think that's a bit. You know, when we started Seedstars, we said that we wanted to have an impact, because at the end of the day, we're here for a short period of time, and we should do something that's fulfilling. And we, at least all people at Seedstars, and I guess here in the call, all have the same objective: is they want to have something that is fulfilling, and that's why we are doing what we're doing. So if we are able to find ways to do it better, leveraging tech, leveraging data, etc., I think this is the way we should go. Yeah, so that's basically it. Let's try to make something impactful, fulfilling, with a purpose, basically, so that we would be all happy, I guess, at the end of the journey.
Thanks a lot for all of you. And I on that note, I think it's a great way to end the talk today, because I think that fulfillment is one of the key metrics. I don't know how to measure that. Maybe one day we'll figure it out, but I think feeling fulfilled is a great. Thanks a lot, guys, for joining in. I enjoyed it. I hope you guys also enjoyed. I tried to take some of the questions, but not everything I could take up, of course, from the audience. And feel free to connect with, perhaps I can say on behalf of the speakers, feel free to connect with them via LinkedIn. You can find the profiles easily through Amdena or otherwise just Googling them. Thanks, guys, again from Fredrik, Tharald, Bas, and Pierre for joining in.
Thank you.
Thank you.
Thank you.
Bye.
Thank you, guys.
Thanks, Drew, for setting it up.